Welcome back. You're still tuned into Chartbusters. Well, this is time to speak to our second guest on the show. It is Rice and Other Specialty Foods Processing Company, LT Foods. The company reported good revenue growth this quarter. EBITDA also saw expansion on a quarter-on-quarter and on a year-on-year basis. Mr. Ashwani Kumar Arora, who is the Managing Director and CEO of the company, is joining us now to discuss the quarter gone by and the outlook going ahead as well. Mr. Arora, good morning. Thank you so much for joining us. Well, it's been a good quarter of revenue growth and EBITDA expansion for you. Can you give us a sense of how much of this 10% revenue growth came in from volumes and how much came in from pricing or realizations? And will you be able to do more than the 4 to 5% volume growth that you had guided for in FY24?
So in the specialty rice, we have grown by 24% with our strong brand, which is Daawat in India and Royal in USA. And this growth, 6% has come from volume and 18% from value.
All right.
And yeah.
Go ahead.
And we are expecting, that all our growth strategies, going to work in the future also, and the margin expansion strategy also.
So specialty rice as a proportion of your overall sales is how much, sir?
So it's roughly 80% of our sales come from our specialty rice, which is basmati. So, yeah.
Okay, 6% is volume growth in 80% of your portfolio. Just wanted to understand, is that the reason why your margins are also doing a lot better? Because at 12%, they're the highest that one can see at least in the last 7 to 8 quarters. Is this sustainable? What's your outlook here?
No, this is quite sustainable because in the last 8 quarters, there was a big fluctuation in the freight rate, which has become normalized. And, the gross margin, if you have seen, in the last 8 quarters has improved. And we are expecting, this kind of margin. We are positive about that.
How much can they go higher from here at 12%? This is what you've seen in quarter one. With the growth strategies that you're talking about and the specialty rice category doing well, do you think there's scope for expansion here?
That's what we are working for. We are, working to improve both, the margin and keep the momentum in the growth.
Right. What about, the broken rice ban on exports? Rather, if you could give us a sense of the performance that has happened in the US business because of that. It's not a large part of your revenue, but this regulation, will that impact you?
So that broken is, long time, they have banned. And as an LT food, we are not in a non-basmati business. So, but we are in a specialty rice business, which, little bit goes to America. And but we have an organic business also, and government has kept organic rice out of this purview, so we will not have the impact on this business.
Okay, so you'll not have an impact on the export ban that we have seen when it comes to the US markets for rice. But you've spoken about your organic segment, but it was hurt in this quarter due to anti-dumping duty on organic soya imports in US. What's the status there now, and do you anticipate muted growth here going on? What is the growth targets like?
So, as you said, on organic soya meal, because of anti-dumping duty, we have got a 33% negative growth in soya business, but we are developing, another supply chain from Africa, and hopefully in the coming quarters that will resume.
Right. And what about the inventory that you have right now? What is the monetizable value of the inventory that you're sitting on?
So we have inventory worth 3,000 crore, and that's a normal part of the business because we all know that, the business we are in, we need to age the rice. And this is a normal working capital cycle of 230 days. We are maintaining that.
Okay, 230 days, and that will continue to be the working capital cycle for you?
That will remain, yeah.
Okay. How much does e-commerce contribute now? Just wanted to understand the dynamic here as well, because this one has grown 158% in quarter 1 itself. Will it be a bigger pie for you? Are you putting in more spends to grow this particular segment?
So in India, modern trade contribute in terms of volume roughly 10. The e-commerce roughly 7 to 8% of our volume.
That's India, right?
Yeah, India is big in e-commerce, whereas in US another part, as e-commerce in grocery is a smaller as compared to India, but we have presence in e-commerce channel across the world wherever we are present.
So are you looking at expanding this pie further, Mr. Arora? Are you looking at some more spends, say marketing spends, something that will mean more growth for the e-commerce business? Is it a profitable proposition for you?
No, this is definitely a profitable proposition. And as you have seen in quarter 1, we have increased our marketing spend, which is, more than the last quarter.
Right. You said e-commerce was 7 to 8% of your India business, but India business as a whole of your overall business is just about 10%, right?
No, India business is around 30% of our total business.
30%. Okay, so this makes
30. Yeah.
Yep. So about 2 to 2.5% of your overall revenue comes in from e-commerce right now. Are you looking to increase your exposure from India from 30%? How much are you targeting, if at all you're looking to increase that?
So India, as compared to other part of the world, is growing fast, whereas India has grown 20% this year, whereas overall growth is 10%, and we are seeing as the category is better growing in India, and we will see change proportion in the coming times.
Okay. Mr. Arora, last question before we let you go. What's the market share like, the volume market share for FY24? What's the target there? Because last time we spoke, you said volume market share was up 210 basis points at 29.8%. What's the updated number and what's the target?
So last time, it was 29.6 on MAC basis. Now it's 29.8, which is, improved by 200 bips. And this is the India I'm talking about. In USA, we are maintaining our market share 50, and we have improved our market share in Europe and other part of the world also.
All right. Thanks a lot, sir, for joining in and giving us the outlook on your business for the year. The street likes what you say. The stock up around 4%, decent numbers coming in, margins at a multi-quarter high. Management believes that can sustain, and volume growth as well, coming in at around 7 to 8%. Just keep an eye on the markets, though. We are seeing some recovery